All right. Good morning, everyone, and happy Sunday. We are now live and ready to go. So, what I'm going to do first is I know it's a few minutes before 9 or 10 a.m. Eastern. I want to talk about, I had some questions in some recent videos about risk management, entries, and exits. I'm going to talk about risk management and more so entries, and talk about exits at the beginning. So, we're doing a stream now about like an hour long, I'd say, and then we'll do one tonight at 8 p.m. just so that people can get into both. Those who can't catch some of these streams at night. So the reason why I pulled up OVID is an example of kind of entries. And so what someone had a question on was they were saying when it comes down to risk management. And I think I'm going to make some videos this week going a little bit deeper into some of this stuff. So there's just one video you can go to. It's like 10 minutes long and that's it that I can have. But I might as well talk about it now because we can. So he was saying that, hey, like what happens when you're in a stock and it drops 50%? Well, don't you then have to have the stock go up 100% for you to kind of recoup those losses? Yes, but the way that we kind of do, the way that at least I manage my risk and the way that I generally trade with based on my entries, that will never happen. I will never buy it like that. That's only going to work. That only happens if you buy a stock once. For example, let's say you buy OVID here before this drop. I think it was phase 3 data or it was bad data. Let's say you buy this stock here at like $6. The stock falls to 3, right? The stock gets cut in half, so it's down 50%, right? So now the stock has to go up essentially 100%. It has to go up from under 3 to 6 for you to make money, right? For you to go break even. Yes and no. The only way that happens is if you're not averaging down and you don't have cash available. So I always preach to never be all in on a trade at one point. Always have some cash on hand so that if you had to add, if something happens, there's an offering, there's a dip, you could add in and then exit that trade potentially, right, for a profit. So here's a perfect example of it actually playing out. And the way that I did this is I actually moved on. So ADMP did the exact same thing. I'm going to zoom in. Sorry, I'm going to zoom in really quick. And then we'll dive into some questions and stuff. ADMP did the exact same thing. So I was in ADMP. It was holding up around this like upper 60 support right in here. Then it had this drop, right? It goes to 40 cents. I actually sold around like 47 or something, if I recall, on the drop before it kind of hit the bottom. But ideally, what was the play here, right? This was a perfect play post, bad data, right? I think it was post bad data. So after that, or FTA decision or something like that, this was a beautiful buy right around 40 cents. That was solid support. So if I did this properly, what I should have done, looking back, you always can learn from your mistakes, is I should have added to my position, right? I had cash on hand. I should have added to my position, brought my average down. So my average was maybe around like 68 cents. I could have brought my average down. Maybe instead of selling the 40s, maybe I give it a day or two to settle. I could bring my average down, depending upon how much cash you have, how large you're in the position. I never go into a position more than 10% of my overall account. So maybe I was only in with 5%. I could technically still double my position here. And so I can bring my average down into the 50s. And then realistically, right, within a week, I'm back in the green or back break even because, within like, a week and a half, because back in December 1st, this stock pushes back up to 54. And then the grind kind of continued. Then, of course, we see what's happening as of late. It's absolutely blowing up. So had the right idea. I like ADMP, but, it was just a little bit, a couple months early on that one, right? So that's kind of an example of how I personally do it. I will never, let a stock just drop 100. Like if I'm going to cut my loss and I want to move on mentally just for clarity, then that's fine because there's always another play. And so that's how I felt with ADMP at the time. But if I wasn't in ADMP, this was actually a perfect stock that I'd be looking to buy, back then. So that's kind of how I do it. And then when it comes down to entry points, what I want to talk about really quick here, and we're using FinViz for this, just really quick. We'll dive into Webull in a second. When it comes down to entry points, and sorry, I'll get to the questions in just a sec. When it comes to entry points, so for ADMP, for example, right, I'm buying this thing in the upper 60s, so sub 70 cents, because you see how it's consolidating. If we can zoom in again, you see how it's consolidating right in here, in this area right in here, from end of October through like mid-November from like 78 cents down to like 68 cents. So I'm buying ADMP in here, okay? That's a perfect example of where I'm buying. And then I'm leaving cash on hand for it to potentially to drop to add on dips. And so I was thinking, if it didn't have this bad news, right, where is the next place to add on dips? See this kind of area back in here where we fell to like 58 cents? Well, I was ready for ADMP if it came down towards like 60 cents. I was going to add some more at that area. So I'm looking for areas of support to add in. And then I'll go back to an example, OVID, right? Like right now, I don't have as much as I want to have on OVID because I'm waiting for OVID. If we zoom in again on the right-hand side, I'm waiting for this. If it does come down, it has support down to like 225. So if it does dip, I'm waiting to add, on some of those dips. And then if it drops below 225, I'm going to get out. Like that's just how I'm going to play it. So I manage my risk by, I'm only going to have, I have an average like at like 250 something. So I think 255 or something like that. So if it does, if it does dip, I'll be averaging down. And then my average maybe comes down to like 245, 240-ish. So if it drops below 225, my risk ends up being, 20 cents or less to the downside, which is fine. I'm looking for, realistically like $1 move here. I'm looking for OVID to make a move over 3, ideally potentially up towards 4, get into some of this gap and fill some of the gap. That's at least my anticipation with the trade. So that's how I kind of manage my risk. And so when people ask about, well, I had someone was saying, well, someone put up, their watch list in the comments, and they were saying, and someone said, well, one of those is bound to go up 100% and kind of minimize your risk of the rest of them, not going up or dropping 50%. Yes and no, but if you're playing stocks, if you're buying stocks randomly, like if you're buying a bunch of penny stocks randomly, and you're not calculating your entries to some degree, then yeah, that's what's going to happen. But if you have a bunch of stocks on your list, like what I always have, I'm always waiting. I have a massive list, which we're going to dive into here in just a second. We're going to go over pretty much all these stocks that I have on this list by some point in the live. But if you're managing it and you're entering, like they're on the list, but if it doesn't come to my entry point, or in an entry range, I'm not going to do it. If it's in a hot sector, maybe I'll throw a starter position at it, which is, like I said, my max position size is 10% of my overall count. So maybe a starter is like 2.5% of my overall count. I'll throw a starter in there in case I don't want to miss the run. And if it comes down, that's when I start adding some more to that position. Ultimately, right, building that position out until it comes to my max risk area. That's where I add my last bit of shares, and if it drops below that point, I get out. That's how I personally trade these things. And that's just my strategy, and it works for penny stocks. It's not going to work for everything. Everyone's going to have slightly different strategies. So, all right, I appreciate you guys for sticking through that 5-minute explanation, but hopefully now when someone comes back, because this video will stay up, when you can come back to this video, you can watch that beginning point and then fast forward if you want to. Okay, I'm going to now go over to Webull. So we are now in my Webull platform, and we can now chart things out, look at stuff, all that kind of fun stuff. So PEIX is the first one I see. I will be diving through a bunch of these, and then you guys leave comments on what you think. PEIX, this is Palantir. What PEIX? Palantir, PLTR is a killer. It's going to make a new high probably very soon. By the way, it could be a good long. It was honestly the entry for a long-term position was there the past 3 weeks, and now it's kind of pushing up. Now, of course, you can still buy it, but if you like it long-term, PEIX, I like it. I liked it really, well down here towards this 540 area. So it's coming down. The only thing is now, what are we seeing with PEIX? We zoom in, right? Well, we came down from 1144, right? We had this drop, fell down to 550-ish, 540 support. And then we kind of bounced around, but look where we bounced up to. See this 50 SMA? And when I look at these stocks, guys, I know it's a little bit small. It's on the left-hand side. I'm looking at the daily chart. That's one of the other questions I got. I always look for swing trade setups. I look for the daily chart first. And even if you were to day trade, I look for the daily chart first. What is that going to give me a sense of? It's going to give me a sense of the range of this stock the past couple of months, the potential range it has even for the past year or so. You could even look back further. And then we can kind of, go from there as to where support is, resistance is, and then we can zoom in because, okay, right now we're seeing support right around this 540, but but if you zoom in on a shorter time scale, you're probably going to find support up around 630 or so, right? So that's why we got to zoom into what's going on right now, understand this stock could come down to 540 and it could easily bounce off that level. So we need to be ready and have cash on hand to add to the position down towards that range. That's how I would at least do it myself. So it's coming down here, and now see this blue line, the 50 SMA, the MA50. The 50 period, simple moving average. That's all it is. It's nothing crazy. You can call it a couple different things, MA50, 50 MA, SMA, whatever. But it's on the daily chart, and we can get a sense of kind of where this area is. And many times when you're below it is resistance, and when you're above it, it's support. So right now we can kind of see it's been roughly resistance the past couple of months, but we just broke through and held up around it, and then we popped up. So we hit $8, but we came back down. This actually is a really good look because now we're bouncing off the 50 SMA. We have a double bottom, which means we have two candles that have a bottom in the same, rough area. So if the 625 area is where we have a two candle bottom, and it's just so happens the 50 SMA is at 620. So that's support. So if you're going to play this guy right now, you're probably going to be buying this thing as close as you can to 625. But of course, now we're bouncing, so we'll see how this goes. That would be the ideal play. With cash on hand, if it does dip below, down towards 545, or sometimes you can enter a trade with just simply the 50 SMA bounce. Like I'm only going to play the bounce off the 50 SMA. So it drops below, I'm out. That's it. And so you can really kind of set yourself up for, a very quick, a tight risk reward here, and you're going to be just fine. So this is a stock that looks like it's trying to make a bounce back up. And if it can come back up and break over this high right here, this $8 or so, it might make a run towards 10. So I actually kind of like that. And it is in the sector, right? We just look quickly in the industry in the bottom corner I have on Webull. It's renewable energy, or renewable fuels. I don't know enough personally about the stock, but I quickly can see that. I see the chart, looks good. So then what do I do next is I dive a little bit deeper. I go to the website, go into their past press releases, and I'll build out my kind of plan from there. So that's actually a good idea. Let's see. I'm going to zoom myself in. GME has more of a squeeze coming base. Let's take a peek. I'm curious to see what's gonna happen. I've heard people say that too. I think it could. The question is going to be the way that I see this kind of going. GME is that we're gonna wake up Monday morning and we're gonna know. So this is a stock that had a recent price target of $20. By a short seller, and then the stock, instead of going to 20, went to 76 from under 40. So it's nuts. Could we see this kind of insanity continue? Yes. Could it go to 100 plus? Sure, it could. I'm not the one to say that this stock is should be valued at that point. I don't know enough about it personally, but it's been nuts. So if we wake up come Monday morning and the market's massively red, like SPY is red, the futures are down, like tonight we see futures down, then maybe that puts kind of a damper on some of this stuff. But if it's even, slightly red, slightly green, I think it's, fair game for a potential bigger squeeze. Depends upon the volume. The volume really comes in the pre-market hours. Watch out. This thing might go to $100. It's got a fairly low float. And people are saying that, hey, watch out, they're going to do an offering. It wouldn't be a terrible idea if they need some cash to do an offering. Take advantage of what they have right here. So just be careful. We're getting up there, though. At this point, for me, if I was to do it, it would just be kind of for fun. It would be lottery. It would just be messing around. And I know a lot of people are doing that stuff. But just understand, if you're going to do that, just make sure you're not risking too much money. You don't want to just do something stupid and then lose half your account. Let's zoom on in. Let's see, UAVS is someone, let's see, UAVS is pushing up. Now the thing is, I like UAVS, right? It's a solid play, but at the same time, it's already up a lot. So I would never play the stock up here unless I'm playing it for the long term. That's a whole different story, right? But that said, what's a kind of a sympathy play to UAVS that I think people may be missing, or that could have a lot of potential, or could make this type of move in the coming weeks and months? Could be VISL. So this is another drone company as well. But look at VISL. It looks like it's not starting. It's already making moves off of the bottom, right? Bottomed out here in the low ones. And so someone who was buying this thing, like crazy back in the low ones when it was consolidating from September really through December, now the thing's at 260 and it's pushing up. And so VISL has that similar kind of chart, right? UAVS made a move like this and then eventually kind of recovered and pushed up, and now it's making new highs. Now VISL is starting to kind of bounce. I don't know enough personally about exactly kind of what, the details of the company, cash standing and all that stuff. So you want to understand that before you because when it comes down to it, right, stocks can spike, penny stocks can spike like this, right? One day, But for it to make that sustained U-shaped recovery ultimately, right, they got to raise some cash. They got to have a decent balance sheet. They got to have something going on for them to actually be able to kind of have the legs for the next move. And so many times we're seeing a lot of stocks that are doing that now. And maybe it's just because, age of social media, everyone's talking about it and we're bringing light to these stocks more. But that's kind of what I'm thinking about right now. So it has support. If we zoom in, these 3 candles down around this 235, that's support for right now. 235 is support. So it could be a decent idea if you wanted to catch some of the move or wanted to kind of find the next UAVS, I guess, in a sense. Take a peek at CIDM. This is another one that I was in back here. Let's see. I was in back here. I played it to 1, sold it at 1, then it dropped, and then I obviously didn't play it again, but it's been ripping since then. It's up a lot though, and this the only thing with this one is that it's pretty volatile because you see some of these kind of wicks. So we have a range from 110 to 135 on this day, on the 20th, a range from 113 to 167 on the 21st. So it's pretty volatile. So dips are your best friend on this guy. But again, still putting in higher lows, it's still uptrending, so it's making a similar move off of the bottom that we've been seeing the past couple months, and so it's making that move, and it has that chart history to make a run back up. So if we were looking at resistance points, it looks like right where it's at, it's a pretty strong resistance because of this right here. Let me zoom in. Let me draw a line. These highs back in here, back in August. So we're pretty much at that point. And if we look back even further, then it looks like it may want to make a run up towards this, 250 area. It could be another area of resistance. And then, after that, it has some range. So we'll see. So when I'm talking about the daily chart, each candle is 1 day, right? If I'm talking about the 1 day, 1 minute chart, that means it's 1 day time frame. So if I zoom out, this is what happened like on Friday for CIDM, and each of these candles is 1 minute. That's what I mean by that. NVIV is one that I was in, a while back, but not a while back, but like recently. And it grinded up in the after hours. It, crushed. It was up 27% in after hours, which is nuts. Let's pull it up. So I played NVIV. I was in this guy down in here in like the 60s, and I played it, a bunch of times, scalping up and down with holding a core position as it rode up. And then I sold it here once it made a move and a nice sustained move over 1. Yeah, has it gone up more? Yeah. Could it go for more? Yeah. Could there be more here? Could there be news, a press release that can launch this guy? Yeah, for sure. But at the end of the day, I was up like nearly 100% since my initial entry point. For me, the way that I trade is that at that point, right, my risk is now significantly higher for holding shares here. Let me take my money and find something with a lower risk, a better reward profile. That's how I see it, and I'm very technical in nature. I don't care if I miss massive gains. In this market, right, could this stock go another couple 100%? Yeah, it could if they have crazy news. It certainly could. But I'm not. That's how I personally do it. I personally don't need to. Capital. I don't need to play these stocks for the 1,000% gain. I'm looking to take my nice solid gains that I know I can get on any stock, almost in any market. Of course, every market's going to change, but in any market conditions. Of course, now I need to do a better job of sizing up a little bit more and letting things ride a little bit more. But that's just kind of with the market right now, adjusting to the market we have right now. But once things kind of settle back down, you're not going to get kind of crazy runs like this. Same thing with ATOS. I will say ATOS is a dilution machine, absolute dilution machine. But that said, everyone loves ATOS for whatever reason right now. I played it. I had an average here in the mid 80s. I played it twice. I wrote it up to like over $1, and then I sold, and then I got back in under 90 cents, and rode this thing up to over $1 again. And now it's going way higher. But again, I made 2 beautiful solid trades, and I was even scalping in between. Solid trades on it. I just felt that when it came back down to like 98. I was like, you know what? I'm not going to, I would like it to come down a little bit more for me to go back in, and it didn't come down to an entry point that I was comfortable with to play it a third time, and then it ran from there. It is what it is, but I still made my money, and now I'm on to something else that I see, more of a bottomed out play. And so now we can start diving into some of those. Let's see, XL Fleet, I think it's only a matter of time before that thing bounces back again. JE, let me talk about JE. I've been in JE actually for a while. Let me see. JE, I was in this guy, and I was looking for a 50 SMA bounce. So the blue line right here, looking for the bounce off the 50 SMA, and we got it, right? So we held support at that level, which was right around $5. And so I added my position down around 5, and then the thing kind of ripped on Friday. And so I'm actually half out of JE. I took half of my position off because I had an average in the low 5s. The thing went to $7. Actually, it went to over 7 in the after hours. Let's see where it went. Let's go to the 4-hour chart, and it hit up to 787, almost at $8 in the after hours. This is probably going to be a gapper candidate in a hot sector, right? So the sector's hot. So playing energy plays right now. Could it go? It can go more. It has room up. There's a high right here, 856. That could be an area right there. This kind of gap right here to 930, the 200 SMA up to 1025. So there's some areas to watch, but I took off half my position. So essentially now it's a no risk play, the way that I see it. GR or GNRS. Let's take a peek at GNRS. Green Rose acquisition. This had a nice pop on Friday, but again, this is a SPAC play under $11. I like that. The thing that a lot of SPACs, that at least the way that people lose money on SPACs, especially nowadays, is that they buy into the SPAC after it's like peak hype. Because they like the company, and then sure, the company could do well. The problem is that there's a lot of these days. There's honestly a lot of manipulation out there, because what you're seeing is like, institutions are like, hey, I want to get in this guy low, and I think one of those that we're seeing a lot of manipulation potentially. I think we saw it with Fisker back in the day, and I think we're seeing it right now with COLV, Clover Health. Let me pull up SV really quick, and then we can dive into COLV. Why I like that one. This one is actually up towards the top end of the range, but again, it's a SPAC. So your downside risk here before the merger is $1. I mean, these are solid risk reward plays. I just don't personally know enough about them, but these are solid risk reward plays. Your downside risk here is $1. I think it's perfectly fine. The thing that I like about COLV, Clover Health, is that you look at a lot of healthcare related companies right nowadays, and there's like none under $100. And with what they're doing, and with a lot of the due diligence behind it, which I encourage you to look into that before you just blindly buy a stock, right? Right now, we have, as I can put a horizontal line right here at these areas of resistance in the past, back in, back in September. So, for whatever reason, whatever that's worth, right? Is it really worth much? Not really. But for whatever it's worth, yes. And we're holding up around that 1325, that 13-ish area, right? Is what we're looking at. So COLV, right? There's a lot of institutions, there's a lot of big money, as I said, looking through some of the filings, looking through who's, investing, because we can see that information. And there is a lot of big money getting into COLV, Clover Health. So this is a stock that I think could make ridiculous moves. It's not going to happen in like one day though, but it could be one of those kind of like Fubo type moves where it just like goes up for like 2 weeks straight, just every single day, like 5%, like whatever it was, and then until this thing hits like $60 or whatever it is. Not saying that's going to happen. This is probably more of a trade to put into. I have it in this account because I've been buying it, because what happened was this is kind of your peak period. And then what I was noticing the past like week or so is that people are complaining. I'm looking on like, Twitter, you type in COLV on Twitter, the ticker symbol, and you're seeing people complaining about it. That's usually a sign to get in, because I liked it, but I just missed the entry point back in here. I would have loved to get in, in the 11s. I just didn't do it. And so I didn't buy it up here. I started buying it, I think in the 14th, I started to buy. And so I was slowly buying some, little by little. That's what I did for COLV personally. Let's see. CCIV is nuts. I think what's going to end up happening is they're probably, the rumors are probably true, to be honest. The merger with Lucid Motors, it's probably the case. I just didn't mess with it. Ideally, your consolidation back in here, the sub 20 area after the initial spikes, was your time to probably get in if you hadn't done so already. I didn't do it. I unfortunately didn't get in. I think I scalped it once or twice. But again, I didn't really scalp it with much size. So I was like, okay, whatever. I just want to move on from the trade. But they're probably going to go, and this is probably going to go 35 plus like that. The way that I see it is that personally right now, unless we get a crazy dip or we get, the official news, if I see the news fast, maybe I'll scalp it, or maybe I'll try to get in as quick as I can. Or wait for this to be confirmed, let it settle down a little bit, or wait for it to be confirmed, then buy in. If it runs from there, awesome. If it doesn't, because it may not be a one day thing. It's probably going to run for multiple days, as more and more people figure out what this is, and there's more people who start talking about it, right? Because now it's rumors. I know there's a lot of people who know about it. That's how I see it. I'll give it some time. No need to, at this point, rush into it right now. personally. But I like it. I do like it. I think it could be a stock that blows up this year once that rumor is confirmed. So we will see what happens. Let's see. BW. BW is actually, it's funny. I actually was in BW in my longer term. Look at this. This is nuts. BW is just ripping. I bought some in my longer term swing account, and I didn't buy nearly enough as I look back. Because I looked at it, I'm like, oh, that's awesome. It's up like X percent. I think I was buying like down in here on the 50 SMA, whatever percentage. It's almost like 100%. It's nuts. But I didn't buy enough. But it is what it is. I'm not going to complain. It was a solid little trade there. I think this one has room to just go double digits. I mean, especially in the market that we're in right now. And once people start finding this guy, there's more to this stock than just a technical setup. And so that's why I played it in the longer term portfolio. That's how I'll generally do it. I'll probably do, not probably, way I generally go about it is I mostly trade technically based with with catalysts, understanding, of course, a company needs cash. They are a previous offering machine. I'm not going to just buy a stock randomly, right? I look into that stuff, but technicals is where I look for technicals first. And if the technicals look decent to me, then I will potentially be looking deeper and buy the stock. But some other longer term swings, I don't look at technicals as much. For example, Tattooed Chef, I'm in. Longer term Neo, I'll buy whenever. I don't really care. I mean, I bought Tesla back a while back. It was up a lot from the past few months, but I still bought it because I didn't really care. So you look a little bit deeper than just the technicals for some of those longer term plays. And some SPACs as well, like Clove, COLV is one that I would literally just buy in that account and just forget about for like a year. Like seriously, like that's what it just, that's how I do it. But to be more active and to compound your money faster, that's why I trade a lot of the penny stocks. They're not good stocks. You're trading crap for a lot of the times. So when I make these top penny stock videos, understand that, and I say it too. I understand that these are trades. These are not penny stocks that I am looking to hold for the long term to just put money and forget. And that's why people who had questions about risk management and stuff, and they were saying, well, if the stock dropped 50%, now it's got to go up 100% for you to recoup those gains. Yes, but we are trading the stock. So we understand the risk aspect here. I'm never going to just hold a stock. Like, for example, if I was to look at like ZOM, a recent crazy move, right? I would have never held ZOM, right, from back up here around 20 cents when for just like 2 months, it went from 20 cents and just every day it was like down for weeks to 6 cents. I'm never going to hold a stock that far. It's going to go, I'm going to say, hey, this low right here, maybe this 15 cents is my max risk. I'm going to hold it down, 5 cent loss. Okay, I'm out, and that's it. I'm never going to hold a stock that far down. That's why I think technicals and having a plan for trades is really, really important. And then long-term investments, you can have more of kind of a fundamental approach. And it's like, hey, I like this company long-term. I think it's going to be a massive growth play, and that's how I do it. Okay. Live screening. We can actually do that really quick. CCIV, February 19th, $4 calls or $195. That's actually not a bad idea. I hear you on that. So think about that. Like if you think about that potential play, even if you just bought one contract, you're risking $200. But if it does go crazy, right, they get the official news, they do merge, right, or they're going to have the merger. Boom, that could be massive. So I can see that. That's a decent play. Only problem though that I have found with option plays on things like that, SPAC plays and stuff, these plays, right? If you understand the options, if you're buying, a shorter term option, understand that let's say CCIV ends up merging with Lucid, right? And the thing goes to $100 and within like a week or so. Who knows, right? Maybe it does something crazy like that. That may happen on like February 25th, and then boom, your February 19th gets crushed. That was worthless, but the next week it was like crazy. So that's why options, you just have to understand that understand the risk on that. If you're playing it, understand that. If you do, you're fine. You can do very, very well with stuff like that. But the aspect to me that I don't like is why I moved from kind of an options approach, like over a year and a half ago, to more penny stocks, is because I could trade for these large percentage gains, but I could kind of control my trade a little bit more, and the timing factor wasn't as big of a deal. Just buying shares. PLTR is pushing up over this 32.50 now. It's got one more dollar for these new highs, so it looks like it wants to break out to new highs. But like I was saying, right, it kind of consolidated in this range, so we can even draw in this little guy right here. Like here's your it just kind of had this kind of flag or this kind of consolidation range, right, where it was up from 33.50 down towards like 21, and it kind of bounced around this range for quite some time. And now you're kind of seeing it kind of go crazy. So I think it's going to break out and make a pretty big move. Let's see. I'm gonna do like a little bit of a live screen now. We'll do a live screen, and then we'll kind of talk about some of the stocks that I like a lot really quick. So let's go to the screener. And the thing is, people ask me about like screening settings and this, that, and everything. Like it's really not. I don't have a specific setting. I don't have anything crazy. I like to look for, you can use FinViz for any type of stock. I traditionally trade more low floats, penny stocks, things like that. So I'll look for stocks, for example, under $10. I'll look for float. And right now, traditionally, we usually see a shift, right? So we saw in January how a lot of stocks under $1, like pennies, like super penny, micro penny stocks, those were going crazy. All of them running up to like $1. Now what you generally see is like February, you start to see like lower float stocks have runs. And it could be dangerous because if you don't understand how to play low floats, which I'm going to say low floats here really under like 20 million or lower floats, I'm going to start a search here for under 50 million. If you start doing that, you can't chase these things because they can come down very, very hard. You want to be getting in low and looking to sell into the pops. That's kind of the name of the game. So here's what I'll start off with. And then recently, the percentage of the float short is actually pretty important. So let's look for like over 10% of the float is short, which means we have a lot of shorts piled into a stock. And we can go from there. So now this is going to give us 5 pages of 20 stocks. So we got a lot of stocks, right, to look at. And the way that I briefly do it is that when you're on FinViz and you just hover over the ticker symbol, you can actually get a quick sense of the chart. And so if I see a chart that might look pretty good, boom, I'll go for it, right? And for example, right, ACY comes up as one that catches my eye. Is it probably the best sector? Industrials, rental, leasing services? Probably not. From what I can see, we can kind of scroll down and find out what they actually do. And it tells you right here, leasing and financing services to regional airlines worldwide. Okay, airlines, not a hot sector right now, right? So you can kind of filter things out. But reason why I bring it up is because it's a lower float stock. We see the float is 1.2 million. Okay, so how did the stock go from $2 to $38? Well, because it's got a super low flow like that. I mean, no wonder. But now it's kind of consolidating. It's getting very kind of tight down around $8. And so that's why it may be a decent play for a balanced play. And it can make a quick move to 10. 8 to 10 is a solid percentage gain. I'm out. Like, if you're playing a stock like that, you know what, you don't want to risk anything to the downside. Boom, you take your money and run. So that's kind of how we can do it. Then we can look to sectors, industries, things like that. So maybe we'll look to, let's see if we can look to like the healthcare. It's been hot, or we can even look to energy. We can look to energy too if you wanted to. Let's look to, let's say, healthcare, and then let's look to if we can go biotech. So like let's look for low float biotech stocks. Super hot sector right now. And then I'll pull up my list as well. But now we only have one page. So now we filtered things out pretty well. So we have stocks under 50 million in float in the biotech industry, under the healthcare kind of sector as a whole, under $10, and the float has to have a 10% short percentage, so we can look for a short squeeze, right? It's been a hot thing as of late. Look at that, AT&F as a stock I'm already in. So here we go, AT&F. We have, what is this, 11, where's the short? 15% short, 14.54% short. I've been in this guy for a little bit, so I've been in since under $3, and now it's pushing up. Broke out over 4, so I'm looking for this thing maybe make a move towards 5. Could it go for more? Yeah, maybe towards 5, and I'll be probably taking some money right there at 5. AT&F looks pretty good because we have a bottom out level. We kind of have support building up here under $2, under $3, and we're pushing up. Now, right now, it's been pushing up, so you're running a much higher risk than if you were to buy this stock a couple of weeks ago, which I was talking about. I think the past like 2 weeks, it was on my, maybe even 3 weeks. It's been on my radar, so I mentioned it in my top penny stock videos. So hopefully, that was something you maybe got to take advantage of. BLRX is one. The chart's a little too much. So this is like, there's too much going on this chart for me to really kind of, take a position. Although down in here, maybe it's a decent spot. So I'm looking for charts first is what I like to look for. CLRB, let's see, where we kind of have this support right around this 180-ish area. So we're right up in here. Could be a decent play. The chart's kind of, wonky. Ideally, I like it's already made a pretty big move. So could it go again? Yes. I like to find the ones that are like down in here that are like really low. No one's found them yet. That's kind of at least how I will do it. Let's see if we can find something decent. If not, I'll pull up my list. Okay, here's one. GALT. Reason why is because we're kind of developing a support. So it looks like, okay, I don't want to see this thing dropping below like 210, but if we're looking at it right now, it's kind of an oversold play. It's got range up probably towards like 275. It's not a huge range, but it could be a decent one. GALT. GOVX is one that's been hot lately for sure. HTBX, I think I mentioned that one to be one to watch. It's actually been running up the past couple of days, which is pretty nice. ITRM is one as well. Let's see. LJPC, LXRX. A lot of these have started to make moves. So I don't like one when they have already made the moves. Oh, VTVT, perfect. So here's where you can find a beautiful one. VTVT, I love this play. Insiders own 72% of the stock. We have a 19.87% short, so there's a lot of shorts in here. We've been uptrending ever since November. We had this kind of pop here, and I think there was bad data, but we had an anticipatory run for the data, if I recall. Then it came down. Okay, fine. We have a gap from like this 245 up towards 275, and this thing has more range to the upside. I think it actually went higher in pre-market hours than what this chart's showing us, and it's sitting right here. So $2 is my max risk. I'm not going to hold this thing below $2. Boom. You got a play from this, low twos up towards 275 for, my first PT would probably be up around 275-ish to fill this gap. Boom. And if they get news, this thing can go much higher. So you're looking at a float. Let's say the float is 14 million. So it's not like a super low float where it's like super, super volatile, but it's low enough. Under 20 million that thing can move. So it doesn't take too many people to come in with some big money for this thing to move. That's why I like that. So just like that, and there's going to be a lot. You're going to have to comb through a lot of things, and you can always mess with your screeners and whatever you want to do. But from there, I found a beautiful play. And just like that, we're off to the races and running. So hopefully that was helpful. Now we can dive into some more other things that I have at least on my list. Let me go back through the chat. I'm sorry if I missed a bunch of things, but I'm going to kind of jumping on through. Float refers to how many shares they have available for trading. That's what the float is. So what they don't, so like, for example, if you look at like some other these, let's say ADAP, for example, pull up the float, right? The float they have is 154 million shares outstanding, but 11.25 is actually available for trading. Why is that? Well, institutionals own 90%. So they already have those shares and you can't essentially buy them, right? So they're not, so that's why. Or sometimes you'll see insiders own a lot. And when insiders own a lot, boom, that's why. But this one could be a decent play as well. ADAP is because it's got a 32% short float. Institutionals, they have 90% of the shares. So this is a fairly low float play where, okay, maybe you have support down to 450, but this thing has a lot perfect, but comes down closer to, under 5. This could be a decent setup, and the 50 SMA is like right around 5. This could be a decent setup if you look a little bit deeper into what they have going on. So here's what you'll do is you'll go to their site and you'll start messing around. Okay, you go, look, boom. They even have it pipeline, boom, just like that. So this one could be one of those plays that you find, okay, here's the pipeline. They're in phase 2 and 3 on these, these drugs, this drug, and then you can read a little bit more. And many times it'll tell you guys, it literally will just say, we're expecting data, in the first quarter of 2021. Boom, done. Like you got to play. Like right there, you have a run up into data, or of course, manage your risk if you're going to hold. If you can't find when the data is coming out, that's kind of it's a little scary to be honest. So if you can figure out when the data is coming out, you hold it up until before the data comes out. Boom. That's it. You don't hold it through the data, right? It makes a nice run before the data comes out. Take some profit. If you've done enough due diligence, and there are people who do a lot more than I do, then you can be more confident in holding this thing through data or holding it for longer. But for me, I like to play the run up before, and I like to get myself out and move on to the next one. That's just how I do it. Okay. Let's see. I'm going to scroll down. Let's see. FUV is one that I'm seeing a lot, and then we'll dive into. VTVT is, I think, could be solid. Again, it doesn't have a massive upside. It's not gonna go like $6 up from where it's at, but it's got a solid like 50% or 50-cent move. I think pretty solid that we could get from where it's at right now, at least. And of course, depends upon volume and everything else that comes in after that. So that's that. FUV is a solid EV play. Blew up. I mean, look at this thing. So we kind of had this initial push, came down, uptrending, boom, and then recovered. So my chart's a little bit off because I haven't looked at it in a while, but I like it. So now what I'm going to do is I'm going to go through a bunch of other ones I like a lot that I've found from other screens. ABIO is one that I have not entered because I have been talking about ABIO, okay? And then I've just been in too many other plays, and so the problem that I've had is that I want ABIO down under 4, and I was too greedy on that under 4, and ever since I said I want to get it under 4, it's literally grinded up from like the low 4s, and like every day just putting in a higher low, and it's moved to 465. Could still go to 5+, and with news, this thing can go a lot higher. Why do I say that? Well, you look left. Boom. I mean, this is a setup for a monster. I mean, we can go to ABIO on FinViz to get a sense of some of the data, some of the numbers behind it. Let's see. So we have a 9.28 million float, so under 10 is pretty good. We have insiders or institutionals own 6%, nothing crazy, but we can scroll down and see if we have any buys. So here we go. At the bottom of FinViz, it tells you some of the insider trading. So we have Robert E. Conway, chairman of the board. December 18th, he's been buying for a while, but he just bought at 416, 10,000 shares. So, that was actually a decent amount because he has now 30,000 shares total. So that was a decent chunk of shares he bought in December. So that shows you he's buying in the 4s, right? The stock's sitting, where he's buying right now is decent. He's an insider. He knows, more than we do, right? So I still like this for a bigger move at some point. I think it's going to do it at some point. Any dips, I want to probably get in on this guy. That's at least what I'm saying. And then they have data coming out, I believe, soon as well. So I like that. SONN, I believe, as well. I think they have an S3 on file. SONN has been a beautiful play since I stopped myself out. I stopped myself out here when it made a new low. And then, of course, it held that low and has just recovered since. They have data coming in quarter 1, which is like right now, right? And so they're getting that what looks to be a run in anticipation of that data. So it may be going without me. I may miss out on this one. If someone else, if you guys grabbed it before, awesome. The reason why I liked SONN is because it pushed up to had these spikes when they had prior news, prior data up to 5, up to 8, had these crazy moves. So that's why I like the history of the chart with a $2.20 downside risk. From a week or two ago, that was a beautiful downside risk, and I wanted to come down to bounce off that level one more time, and it just hasn't done it. So I missed out for now. Under 3, I think, is probably okay, risk reward wise, but just understand, I think they have an S3 on file, so they could do an offering. So just be careful of that. Ideally, the way these companies will do this is that they will put out news, because the stock has been kind of dead for a while. It hasn't gotten that much attention. They'll put out news. They'll release their data. It'll hopefully be good, or they'll release data. They'll say, hey, this is what happened. It's awesome. It's really, really useful, blah, blah, whatever. They'll get the stock to spike. Then they'll do the offering once they have the attention, once they have the volume, once they have the traders there. Then they'll do the offering, and then the stock will come plummeting back down. Generally, that's the kind of the way things go. Doesn't happen every time, but roughly, that's what you'll generally see. So, okay, let's see. Let's see other ones that I have. Let's see what else we got. There's a bunch. There's honestly a lot. BKYI I missed. Let's take a peek at BKYI. I missed this one because it's been pushing up. So ideally, I liked it down here, and I kind of missed that move. Oh, CHFS is on the list, right? Yeah, CHFS. Super low float stock. But the thing is, it's not a perfect kind of bottom play right now, but CHFS did a recent reverse stock split, I believe. The reason why I drew this in, have a little trend line right here, right? And then we have this downtrend. Boom, we broke out of this downtrend, and it's pushing up towards $10 with chart history up towards 12 and much higher. This thing could go to $20 potentially. The reason why we go to CHFS, let's pull this bad boy up. Look at this chart on FinViz. It has chart history to 37. I think there was a reverse stock split. I don't think the stock actually ever was that high. There was a reverse stock split there, but we have, let's see, short float, not that much. Well, it makes sense. You're not going to be honest, if you're looking at short stocks, you're not going to short stocks that are fairly low. Chart history, if you look at the chart history, they're fairly low, and they are low floats. I mean, it's a recipe for a margin call. You have a float of 2.23 million. It does not take many big buyers to blow this thing up. And this thing has room to 10, I would say 10, 12, 15 would be the first, targets I would be looking for, and then potentially $20 for CHFS. And there's more here, I believe, too. If you do a little bit of digging into some of the due diligence behind what they have going on, there's some more there. So I like it. Technically speaking, it's not an easy trade for me. So if I was to take this guy into like if low floats get really hot, I'll take it, but I would go in with like a starter position. I would not be going in very, very heavy. That's just that. Let's see. I'm gonna scroll back through and see a couple more if we got any other questions. TNSP. A lot of people are talking about TSNP, right? Or no? Yeah, is this the one? Let me see. Because I've been seeing this one a lot in like all like comments and stuff. Chart wise, here was the play. This is an OTC play though too. So for me, I don't usually play OTC. If I do, I trade on TD Ameritrade. For me, you can't trade them on Webull right now, this is just my broker of choice. So that's just me. I just didn't know enough about it. I'm sure people who looked in deeper could tell you what they have going on, why this is an X dollar stock, why it's undervalued. For me, I just didn't know enough about it, but it did break out and it made a new high, so it could be making a move towards 50 cents, I would say, for sure. I'm gonna take a look at Vero. Thanks appreciate the donations, guys. Vero is sitting right here. Okay, so we have support, worst case scenario, down to 775. We have support here 850, and it's sitting right at that level. So I actually like it right here, and we can even draw in a little downtrend line for Vero. Look at this. It's like potentially going to get ready to break out of this downtrend. So I like these setups where it's like you have a support, a bottom support, and then you kind of have a downtrend and you break out and make a new high. So this could be getting some attention soon. It's taken it's had a little cool off period. It's calmed down, and now it can make a run. CLNE, and then we'll look at OPTT. CLNE, Clean Energy Fuel. This is actually a nice setup as well. We take a peek at roughly a little downtrend right there, roughly, a little bit of an uptrend right here. I mean, this is a nice little pennant shape, potential breakout coming upside, breaking out over this high, boom, $12 easily. Downside, it can come back down and consolidate down in here, down towards $8. So if it does fall to the downside of this kind of break, I could see it come down towards 8 in the 8s, or if it breaks out, makes a move over 12, I can see. So I like that play, actually. Especially in this sector right now. Let's take a peek at what they got going on. Clean energy fuels, experts in natural gas for transportation. I mean, the sector's hot. You can't deny the sector right now. I'm talking about clean energy. Okay, so we'll see. We're going to get some, I think we have on the 27th, Biden is doing a climate change speech. So the reason why that's important is because, on that day specifically, he may talk about some things that they have going on or that they're going to be doing. And it could be, geared more toward the clean energy sector, and that could be hot. So when you see that happening, that could be the catalyst for, let's say, some of these stocks that are clean energy stocks to make massive moves to the upside. So we'll have to see how that goes. That's why I wrote it down just in case, it's coming up in like this week. So we'll see. OPTT. Here's my only concern with it is that it's already up a lot. So I liked it. If you were holding shares from down around the trend line, you're golden. If you're trying to get in now, I just don't know if that's the best move because we did break out over these tops. So reason why I draw this, we have a range, right? We had this bottom trend line down here, uptrending. But then we have these tops that we kind of put in higher highs, and we just did another one. Now, what you can see is that we broke out of this kind of this range, right, that we've been trading in this kind of area, and now we're breaking out. So could it go for more? Yes, but I've also seen a thing where, not a thing. It's a pattern that many times these end up being failed breakouts. So you'll actually you'll actually notice that a lot of times when you break out of the top end of a pattern like this, it's already made a mass. It's doubled essentially from where it was, right? Many times it will fail the breakout and it won't go for more. It'll come back down. Now I'm not saying it will, but OPTT I think it could be a double-digit stock, especially in the sector that's super hot, renewables. I can see it. Just be careful. It's already up a lot, from where it was. That's at least just my take. HITI, huge growth potential. Let's take a peek. Taking a peek at what we have right here, high tide, right? HITI. And it's actually bottomed out. So it's just not bad. I mean, if you look where it's sitting right here, it's bottomed out. If I'm looking at the right thing, right? Yeah. I mean, is it the same thing? Okay. I don't know. I'm getting it must be on a different exchange than I'm looking at. We can take a peek though. HITI. High tide. It's on different exchanges, right? So I don't think we see OTC. You have OTC. You have other exchanges you can buy it on too. But it seems like it's getting a lot of attention, a lot of volume. So it's a stock. I think if you take a peek, if I'm looking at the right things, take a peek at their site and dive a little bit deeper right here for those who are looking at. Okay, cannabis. Okay, well this is a hot sector right now, so I like it. For those who are so here you go. You have a bunch of different exchanges to buy it. So I like a lot of these cannabis companies. And the thing that I like a lot about these, though, right now is that I personally want to see things cool off. So I'm actually, they're high on my watch list, a lot of the cannabis stocks. New ones that I'm looking at, old ones that we played before, right? The reason why is because what we're going to see now is that they're going to cool off, but we're eventually going to get a bill that's going to come up and say, hey, there's a bill now in the House, or they're going to put through a bill through the Senate or through Congress. And that's going to be to legalize cannabis. And so in the US and whatnot. And so once that happens, these stocks will go crazy because it's probably going to pass. Let's be honest. Democrats control the House, the Senate, and the presidency. It's probably going to pass. So that's the next big catalyst. They've been getting a lot of run-ups, but I think the big move is still, there's been some big moves on some stocks. But there's still a bigger move coming. And that's why I like a lot of those cannabis plays. NAV. Let's take a peek at NAV. Navistar International. It's getting really, really quiet lately. Tech SPAC, searching for tech. Taka. TACE. TACA. Okay. This is a new SPAC. So these are fun because when you can get in on a new SPAC, I am personally not someone who's been super glued to the SPAC space. I'm not the one that's finding the new SPACs and then this, that, and the other thing. I'm just not as, into that right now, personally, because it's just I have what's working for me, and so I'm doing kind of my thing. But at the end of the day, these are crazy opportunities. You're able to get it the way that I see SPACs, and I don't mean to sound like I don't know. I don't mean to sound stupid, but it's really you're getting into it. You have the ability to get into companies at the ground floor, whereas the traditional IPO route, you can't do that, right, as a retail trader. So I like them, but you have to do a little bit of due diligence yourself, okay? If you're not doing any due diligence into the companies and you're just buying the next SPAC, it's probably not the best way to go about it. You look at some of the ones that I like COLV, Clove. You look at a bunch of these SPACs, and they have big-time backing, big-time names, massive investors, massive institutional investors, loading up on these stocks. And you look at the sector, you look at what they're doing. They have some partnerships. I mean, there's a solid. Those are solid companies that you can get on the absolute ground floor, which is awesome. So it's an awesome opportunity for a lot of people these days. Right now, NNDM is one. I'm waiting for another offering, to be honest. If they do, they may not do one. But look at this thing blowing up. I mean, the thing is just exploding. $20, 25. Who knows how high this is going to go? I've traded a couple times. I bought some shares, I want to say, down in here back in November, and I was I doubled my money in a few weeks, and I was like, I'm going to sell. I sold, and I could have made more, but that was a long-term trade, or it was my longer-term account anyway, and I wanted to clear up some cash for some other stuff. But I mean, this thing is nuts. Every offering, this thing drops and it recovers beautifully. So NNDM is really, really accelerating now. I think they closed their recent offering, but it's only a matter of time before they do another one, I think. We'll see. TSNP, everyone asks about TSNP. I'm just not sure. I don't know enough about them, but they broke out. So they broke out, hit a new high. So this thing may have some more room. Either it's going to have a failed breakout where it's going to get rejected now. It broke above and it's going to pull back and consolidate, or it's going to make the continuation move and run back up, even higher. With SPACs, I get in. If it has good leadership, good sector, and sell on the pop PR, boom. That's the way to do it. So there's a whole strategy inside of these SPACs these days. So that's the thing. If you dialed in a strategy, boom. If that's what's working for you, you're gold. And there's so many to go from. Appreciate the donations, guys. Appreciate it. DSGT is one that is I've been getting a lot of people asking about. But here it is. It broke out of this kind of downtrend, and it's kind of popping up. So I kind of like that move. This thing can make a nice little push back up towards these highs, 150 and potentially more. So I actually kind of like it, to be honest, where it's sitting at. Let's see. I want to look at some Bitcoin stocks too, because Bitcoin's pulled back. Are you a fan of Wall Street Bets and their plans with GMEBB? Very volatile. Yeah, I think AMC is another one to think about as well. AMC could be a play for that as well. That's why I have 100 shares, just because I didn't like buying AMC where it was, but I saw the volume and I saw the potential. I saw the percentage of the float that was short. So I said, okay, I'll put 100 shares in. If I wake up on Monday and the thing goes crazy on this next week, I make $200, whatever it is, goes to $5, maybe it goes higher. I'll play my lottery play. That was kind of my lottery ticket into this week. But BlackBerry BB, I wouldn't be surprised. I mean, look at this thing; it's blowing up. I mean, I'm really interested to see what happens, and what I think what you could do is base this off of you wake up. There's a lot of stocks that are in this situation to have a high percentage of the float that is short, right? So if you wake up come Monday and we notice that the overall market is up, or it's down, or it's even, or whatnot, and we look at some pre-market action on GameStop, you look at pre-market action on BlackBerry, on AMC, we could see the exact same thing happening. So it wouldn't be a terrible idea. I'm not recommending that you go in massive on these plays, but these can move massively, right? With these short squeezes. So if you really can't, if you have to, the FOMO is getting to you and you feel like you've got to buy, I don't know, for whatever your account size is, buy like 0.5% of your overall account or 1% of your overall account, buy it. And then, it's your lottery ticket if you just have to, because I know people are getting FOMO and that's just not good, but 1% of your account, just have some skin in the game, have some fun if you think it's going to go, and that's it. But BlackBerry, look at this thing, hitting up to like $15 in the after hours. Short percentage is only at 7%, so nothing crazy. But again, BlackBerry, right? I haven't seen a BlackBerry in like years, right? So that's how it's like one of those things, right? But why I think AMC could be one of those. Movie theaters, they are opening some theaters, to be honest. So it's not like it's this company's gone, right? They're opening theaters, but 36.58% of the float is short. This stock could go to like $5, $6, $7 like that, very quickly. So that's why it's possible. I can't wait to see if GameStop. I could see GameStop if I'm not recommending or predicting these stocks to go to like GameStop to go to $100, but I could see GameStop hitting $100 based on how we saw just absolute madness last week, and I would not be surprised. Back to some Bitcoin stocks, because I think we got to talk about Bitcoin. Let's pull this bad boy up. How is Bitcoin looking? I haven't even looked. Okay, so it kind of fell out of our consolidation pennant shape, little guy right here. But now we're down here. So we're sitting, down here around 30,000 is your support for right now. We did drop below actually on, what was this, on the 21st. So 30,000 is your support. I like this as a decent opportunity for stocks like Mara, stocks like Riot. Mara bounced on Friday. They pulled back, and so here's a decent opportunity to get back in. One thing that, if you want to laugh at me, I had Mara at $2.50 and a decent amount of shares at $2.50. Had I held, or had I still hold, if I still was holding those shares, I would, let's just say that my account challenge from 15,000 to 100,000, I'd be very, very close to 100,000 by now. So that's all. But I'm doing things, through my risk management, my consistent strategy. I'm not trying to get there in the end of the day. That's it. But I like these plays. These are good. I think these potentially could be good longer term plays. Riot, Mara, these could be longer term. Let's pull up Riot really quick. Other miners as well. These could be longer term. These could be longer term positions. I personally think I have Bitcoin. When I have some more cash, which I think I'm going to get in like a week or so. Once I have some more cash in my longer term account, I'm going to buy some more Bitcoin if it's sitting here at like 30,000. Hopefully it stays. Maybe it won't. Maybe it'll run back up. I like Bitcoin going forward for the rest of the year. I think it could be a massive play into, the end of the year, and especially how it gets. This is people are saying, those who are more experts, and who is an expert? I don't know. They're talking about how there's still months left of this bull market for crypto right now, and we're in one of those cycles. And so, and with what's going on, printing all this money, I could see it. I could see this thing going to 100,000. I mean, who knows? But if it does, right, your Riot, your Mara, those plays are going to be blowing up too, because those are your traditionally your best ones. MGTI is a Bitcoin miner. So it popped up, right, and then pulled back as Bitcoin's been pulling back. But here's your decent dip buy, right, for MGTI. If you're looking for Bitcoin to recover, there's your dip buy. Only problem is that you kind of have to, to a degree, Bitcoin's got to keep holding up. If Bitcoin just kind of falls off and slowly just downtrends, then these stocks could kind of all just go back down to where they were. INUV, this is a stock that I think is on the radar this week, but it's been up a lot. So I don't play them up here because your risk is significantly higher. And someone's also asked me recently too. ABML, I think, is the one that I remember I've been seeing, and that thing has been pushing up. I like that one from what I was looking at. Ethereum shot up. Ethereum shot up a lot, I think. We'll talk about that in a second. INUV, people are talking about. So I've had some questions about like, how do I handle, a stock that drops 10% in the pre-market and then all of a sudden becomes the big runner of the day? Well, the way that I personally handle that is that, of course, if you're going to be day trading something, you're either going to have to kind of know this is big news, and you have to know a decent amount about what the news is and the sector and things like that. But if you're swing trading, it doesn't matter to me, right? Because I'm buying the stock down here. I'm not buying the stock up here because I have significantly higher, risk to the downside. So I can't fathom the move, right? Maybe it makes sense and it holds up around this 160, 150 area and then pushes back up and runs. But for me, just for my strategy, this is not a consistent trade for me. For some other people, yes, if you have solid risk management and you know how to cut stocks and know when to add, know when to, then you're fine. But for me, I just can't, I don't know. It's just not, it's tougher for me to see where's support, where's resistance, where is it going to be headed? It's already got to pop. So I don't know. MMWM. Let's pull this bad boy up. Or no, MMMW, sorry. Mass megawatts. Wind power engaged in development of clean energy systems, solar tracking systems, solar powered. Okay, so this is in the hot sector. So boom. This the thing is, OTC plays right now have been super hot. I don't play them personally, but they've been very hot right now. A lot of these OTC plays like this, clean energy plays, they've been just crazy. So I mean, I can see this thing going for more, but it's also up a ridiculous amount. So is this a high for me, right? Just from my experience, like 18 months, whatever it's been, a year and a half trading penny stocks. Is this a high probability play right now? At this point, no. Is it a high probability play if you've done the due diligence and you found this stock back in here, literally 2 weeks ago? Not even. If you found this stock a week ago or 2 weeks ago, because you've done a scan, you've been searching, you're doing your own due diligence, that's a high probability play. It's bottomed out. Where's your downside risk? Okay, maybe like 20%, 30%. Now, upside potential, it's blowing up. So up here, you have a massive downside risk if it comes down one day, and maybe it's a pullback and it goes again. So if you there's a lot of people that are going to buy the stock up here, right? Maybe this thing goes to 50 cents, $1, who knows, right? But you buy it up here, it comes down to like 18 cents because it can easily do that in one day. It comes down to like 18 cents, maybe 15 cents, and you're down like massively on your position. And so for many people, they just think, I got to cut it, I got to take my L, and I got to move on. Meanwhile, the next day, it goes to 50 cents. So that's why it's not a high, because you're throwing off, you're like mentally, you're making it harder on yourself because you're going to probably at some point have to see red at some point. Maybe it's not on this stock, but it's on another trade, or it's on a different stock that's in a similar situation. You're probably going to have to see some pretty nasty red at some point. And if you can handle that, that's fine. But if you can't, for most people, their mind throws them off. That's why I personally don't like playing that stuff. But, again, that's just me. Everyone's going to have what works for them, their own strategies, what they know more about stocks than I do. I don't know I can't tell you what's going on with this company. I wish I could. I can tell you the sector's hot. I can tell you they're in a good sector. I like it. But I can't say, this is going to $1 or it's going back to zero. I don't know. Ideally, I can just say what I think about the chart action, the price action, and it's just up a lot. Let's see. GSAT is one that I think people were asking. I have people asking me about GSAT. If it can hold $1, it could be a decent support buy. But right now we kind of roughly have this, higher lows being put in. So here's your trend line. Higher lows being put in. It's right towards that trend line. $1 I would like to see hold roughly. If it can, awesome. Maybe this thing makes a nice recovery back on up and pops over 150. But it's already made a pretty big move from like 20 something cents. So just understand, 30 cents or so. The bounce off of this, it'll pop up here, and the bounce off of the 50 SMA back on the 4th of January. That was a beautiful bounce. That was the time to get in, honestly. GNOG is one that's interesting. Let's see how this guy has been doing lately. Okay, so it's still consolidating. It's holding the 50 SMA, so it's holding this line right here. It's still looking fine. I like this as a longer term play. We'll see what happens. We'll see what happens with online sports betting and gambling and stuff being legalized in more and more states. I like the idea, but again, it's been kind of boring ever since we had these pops to like 27. It's kind of been boring, but it's got some range, so it's gonna be a good scalper if for those who are looking to scalp some stuff. What else we got going on? Let's see. I wanted to pull up some other ones. Actually, there's one penny stock, or I guess somewhat penny stock, that we can talk about that it's on my list. TTMP. The longer it sits down here towards $3, the longer I like it. I think if it can come down towards 3, it even could come down towards like 282. This is my buy range. So the way that I'm going to do it is I'm going to start using these rectangles more because they're kind of cool. So I like this right here for TTMP as a buy range, and it tells you, that's a 6%, range right there. So if it comes into that range, I'll be buying. Honestly, you could probably bring this up a little bit more. Bring it up into like right there. So from like 320 down towards like 280, that's a buy range for TTMP. Look at the past. I mean, it's bottomed out. It's another stock, right? Let's see the float. Let's go over to FinViz and look at the float for TTMP really quick. 6.5 million float. This thing is going to go. If low floats get hot again in February, which is what we're expecting here, this is going to be one of those stocks that spikes hard, almost guaranteed. So I like it a lot. So we'll see what happens, obviously. I'm probably going to scalp. What's a scalper? So a scalper is like, if I'm looking to scalp 2%, 3%, like ideally, we're looking at some of these stocks and we're looking for like large 20, 30+% moves. If I'm looking to scalp, for example, I'll pull up NVI. Well, actually, let's see if I can find one that was decent. LODE is one that I did back in the day. So look at LODE. We have this kind of range where like each day it would have a 5-cent range. So it would come down to like $1, and then it would like the next day or the same day it would go up to like 107. So simply a scalp here is that I would be buying it at $1 and then immediately putting a sell at like 105 for a 5% scalp. And I did that a couple times with I held a core amount of shares. Like let's say I held 1,000 shares, and then like I would take 500 to 1,000 shares and I would just scalp those shares. And eventually it made a pretty decent move. And so then I sold my shares on that move, the whole core size, as well as the scalp, right? So that's kind of a scalp. So you're looking for a smaller percentage gain, but you see a dip or you're seeing a pattern that you're noticing, and you're like, yeah, I'm going to take my couple percent. And that's one of those things that I think is so much more effective for people who are looking to like, I guess day trade, rather than look for breakouts and stuff, because breakouts are a whole other style. If you're advanced and you've done it, then that's that. But if you're like for a breakout, for example, let's say you're looking for LODE to go over like $1.30 right here. There's a prior high. That's a breakout trade. Maybe you get a couple percent on that. And for stocks that have news in the morning, those can be massive breakout trade potentials. But for most people, I would just personally recommend you swing trade, right? That's like your core strategy for most beginners. You swing trade with the core strategy, and then you can maybe, if you want to day trade, if you have the ability to scalp, you can like scalp some stuff where you're looking for dips. So like NVIV was one that I used to scalp a lot back in the day. It would kind of have this pop to like, it would pop up and then the next day it would come down. So I'd buy these dips and then I would literally sell it the next day, for 10 cents higher. And so like that was a 10, 15% scalp that I would just definitely keep doing. And so I look for that type of stuff. And many times you'll also notice, like if we go back to like OPTT, I'll pull this guy up and we'll look at like the past 5 days. You'll notice some of these kind of patterns or some of these kind of scalp trades that people could have been taking advantage of. Now, it didn't really happen on Friday. Keep zooming out. What I'm looking for is this morning scalp. So what happens is the market opens up and everyone panic sells and everything kind of comes crashing down. So OPTT opens up. It's at like 350. It immediately goes to 325 and it bottomed out there a couple times. So here's a scalp trade where you can probably take 25 to 30 cents easily, buy it down here towards 325, sell it back up here once it comes back up towards the open price. That's 25 cents. I mean, it's not a huge percentage on a $3 stock, but it's pretty good for a scalp trade, for a morning scalp. And for people who are looking for like 1% per day, this is a solid strat. I think scalping is a pretty good way to help compound, on a lower risk basis, buying, scalping like ridiculous dips. And you can even look for like on a scanner, like for example, if I go to like my customized layout, on the right-hand side, I know it's small, but on the right-hand side, what I can go to is like I can go to top losers. So I can look on Webull and scan for the stocks that are down the most, right? And I can look for the top losers in the past 5 minutes. So in the past 5 minutes, what stock's down the most? Boom, I can go see, okay, why is the stock down? Is it because of bad news or is there no reason? And I'm looking at the past history. Okay, this stock has pretty much been holding up at like $4. It's down at 365 on a random kind of wick down. That's a stock where you can scalp 20 cents like off of. So maybe you can do that. That's how I would see scalps. It's not the best strategy for everybody, but if you have some extra cash and you get good at doing that and you can kind of identify, when stuff's oversold, when stuff is gonna bounce. Like for example, OPTT, I've been watching this stock the past couple of weeks. I knew it was in an overall uptrend. That was a solid scalp, in my opinion. Let's see. I want to go through a couple things, then we'll wrap things up because we're going for a little over an hour. ATOS. I know people love ATOS. I've been seeing it. My only thing with ATOS is that, they filed an S3, so they could do an offering at any point now. They're a dilution machine. They've done 3 offerings in the past month, so just understand that. The stock price is up quite a bit in the past couple of, past 2 weeks. It's up quite a bit since their, last offerings. It's based on the company's history. It's probably going to happen again. That offering is when you buy. Is my opinion. That's when you buy it. Okay. If ATOS, I am out. I played ATOS down here in the mid 80s, right? I played it up here towards 120, and then I rebought back here on this offering, played it up again towards 120. I played it a couple times. I think I played it 2 or 3 times, and I made nice gains. I'm not going to complain, 40%, whatever it was, twice, and I'm good. So I was out, and now if it comes back down and does another offering, boom, that's when I'll buy. If they do an offering before they have any data, any news, anything, that's a perfect time. What they may also do is they may be ready to announce some news. We know they have a pretty thick and juicy pipeline. They've got a lot of stuff going on. So they may be ready to come out and say, hey, here's our, here's this data, here's this, whatever. The stock might spike $3, $4, $5 because it could do that, I think it's a lower float stock. Let's take a peek at ATOS. Float wise. Let's see. It's a 7 million float. So yeah, it's a low float stock under 10 million, right? They may spike it up on news and then drop a nice fat offering. So that could be the thing. So if ATOS does get news this week, could happen Monday to whenever, and the thing spikes up, I would be taking profits there and not holding for this thing to go to $10, $20, because they will do an offering very, very soon after. When I say will, I'm like 90% confident they will do it. So that's just kind of the nature of how these things work, though. But I mean, that's part of the game, and it's fun if you can kind of see how it goes. Like, once you start doing this stuff, you know how it's going to go. Either they're going to do the offering now, and they have a juicy pipeline, and boom, if that's the case, then yeah, I'm going to buy the offering because they got something coming. Or they're going to spike it up now on news and then do the offering. So if you're looking for a short, it could be a decent short. So you can. I don't personally short, but that could be a decent idea. I'm going to wrap things up in a second here, but Tilray, I like Tilray as one of the bigger players, right, in this cannabis space. I'm just waiting now for things to kind of calm down, settle down a little bit. Let's hear less talk about these cannabis stocks, and then we'll start loading the boat on a bunch of these in anticipation of we actually getting a vote in Congress. that's when you kind of want to be ready for it. You want to be getting in before there's even news and rumblings of a vote. But at some point, right, the past, like, the first couple weeks, after like the stimulus kind of is solidified, I think then the next couple weeks after that, you'll see some rumblings or some more rumblings of cannabis reform or cannabis, legislation. So that's what I'll be watching for cannabis stuff. ATOS is they're going to get news. The question is going to be, are they going to do the offering before the news or after the news? Probably after. So I don't know. That's just the risk. Understand that they have the S3 on file. They've done 3 offerings in the past couple of weeks. They probably will do another one. They when they file an S3, they filed a shelf. I'll pull it up before we hop off. BAMSEC.com tells you can go and find all these SEC filings for these stocks. Here it is, a shelf registration on the 22nd. So what does this mean and what does this actually do? They registered 10.5 million. So they, registered 10.5 million shares of common stock. So that this means that they can offer at one point 10.5 million shares, or they can do pieces. So they can do this in like a 5 million share offering, and then a 5.5. So that's what it means. So now this is in their back pocket. So they could pull from this whenever they want. That's all that really happened. So hopefully that's helpful. Rocket's been kind of boring. UMWC, right? That's GHIV. The thing that they have some crazy numbers. What you really need for a lot of these SPAC plays, Clove, UMWC or whatever it was, UWMC. You need these things to get picked up by a firm, by an analyst with a nice price target. That's what you need. They're solid companies. I think it's just been kind of like boring where we kind of are right now. But you pick it up, an analyst picks it up, a firm picks it up, and they initiate coverage with this buy reading. That'll be what gets it going. And they have legitimate, like GHIV or now United Wholesale Mortgage. They have legitimate numbers. They've got massive revenue numbers, massive profit. Like they have big numbers. I think could back up a lot of people jumping on board and putting in some higher price targets. That's just my take. I'm going to wrap things up and go for a little over an hour. This will stay up on the channel. I talked about at the beginning, if you want to go back to the way beginning, I went over some risk management and some of my entry strategies. I'm going to be going live again tonight because I know people can't come in the morning. They can come tonight. Some people can't come at night, so they came in the morning. So I'm going to do it again tonight. And we're going to go live tonight, and we're going to be talking about, a lot of other stuff too. Similar stocks, other questions, things like that. So that'll be there tonight, 8 p.m. Eastern, and I'm going to go over in the beginning, the first 5 minutes, I'm going to do my exit strategy. So where I set my price targets, how I exit, and when stuff kind of changes, how I adjust. So I'm going to be doing that tonight. Hopefully you guys enjoyed the live. If you have any questions, again, leave them in the comment section of this video. Come tonight if you want. I'm sorry if I missed some stuff. I try to do my best on answering as many things as I can. I know there's just sometimes I can't catch them all. SBCE, I like SBCE as a longer term play. It's in my long-term portfolio. So that's that. I appreciate you guys so much, and I will see you guys either tonight or in tomorrow's video. Good luck this week, and I'll see you.